All right, guys and gals, back to work. Boy, markets are messy ahead of non-farm payrolls tomorrow morning. But I'll tell you, the charts right now, I see a couple really obvious clues on these charts that are making the game plan pretty easy for us to make money tomorrow. As always, I'm going to cover my favorite trades in this video tonight. I'm going to make sure you have a game plan to make some money tomorrow as well. So Friday is right around the corner. Non-farm payrolls coming tomorrow. Charts ready to go. Enough of the intro. Let's go make some money to finish up the week tomorrow morning. Nasdaq triple Qs are ready in front of me. The E-mini and the SPY is ready. I have four important clues that are tipping us off to where I think the best trades are waiting for tomorrow. Two of those clues are right here on these hourly, these 60-minute time frames in front of us. One important clue here right now is we are certainly bullish overall on the S&P and SPY, the Nasdaq, and the triple Qs. Overall trend is definitely bullish still overall. That'll be our directional bias, our directional filter for tomorrow. Second clue, though, is if you zoom in closer on the hourly time frames, you'll see right away here, we are definitely bullish overall, but bearish here into a trading range. Bearish into a trading range. Now think about this. Bull market overall, bearish range. Usually in these scenarios, we have to go lower before we end up going higher. I think that is one of the most important clues on these charts right now. So two clues on the 60-minute time frame right now. I have two more important clues, though, on some faster time frames. Some tick charts help us bring this all together, time some entries, and make some money to finish up the week on non-farm payrolls. Before we do that, though, let's check schedule for tomorrow, because tomorrow, oh, it's a Friday. There are three things on my mind, my radar for tomorrow. First thing is we are going to keep watching the escalation, the conflict happening right now in the Middle East between Israel and Iran. That is certainly a big wild card for tomorrow. A fresh headline on that topic may change the game plan for tomorrow. So that's a bit of the known unknown for tomorrow. Second thing in my mind for tomorrow is tomorrow's non-farm Friday. You better expect some volatility. There'll be some fireworks around the employment number tomorrow morning. Expect volatility there. And the final thing is tomorrow's a Friday. Fridays tell me to get in as early as I can and always leave a runner. In early when the markets are liquid and leave a runner. Fridays love to run. So three things for tomorrow. We're watching headlines right now out of the Middle East. Expect some drama, some fireworks around the employment number tomorrow. Leave a runner. Fridays love to run. Now let's get back to our charts though, because it's good to know the game plan, the news for tomorrow, but the money is made on these charts. I promised you two more clues on some faster time frames. I think the 60-minute time frame right now is really important. Big overall trend, bearish range, but you know what? We're not going to use the hourly charts to time the entries. I use tick charts. Tick charts are based on volume, and you'll see right away they make pattern recognition a hell of a lot easier. That is a 7,000 tick chart, all the time frames, upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That is the 21 EMA. It's almost the only indicator we need to find lots of winning trades. I talked earlier about two more clues on these tick charts right now. One clue is right here, this big range right in the middle. Now ranges act like magnets. Ranges love to rotate. They rotate back and forth with these expanding triangles. They love to rotate back and forth with the triangles. They love to use these pendulum swings, the amount above, the amount below. That's one. Well, that is the third important clue here. Overall, that range is a magnet and wants to rotate. But arguably, what might be the more important clue, the fourth and final clue, you'll notice here, small little guy, tricky little sucker. It runs lower into a trading range here. Now, what does that mean? Well, ranges love to rotate. So we rotate down, back up. This range now is going to want to rotate roughly about the amount above, the amount below. We have the non-farm payrolls tomorrow. It may overshoot that by a little bit, obviously, with that volatility. But this is why I put all these clues together. Overall bullish on the 60. Bear range on the 60. Range above us here on the tick chart, right? This seems to be a great spot for a bear trap, and this could easily trigger an epic short squeeze for tomorrow. Now, we all know bear traps are great, squeezes are great, but how do we actually time that entry? When I think about bear traps, as we go lower, this is a horrible place to be selling. I don't want to sell down here. I'd like to be a buyer down here. And instead of trying to pick at the bottom on this, I'm not going to blindly buy it. What I'll do is I'm going to wait for price to pull back and look to trap in some sellers. I'm going to use that failure pattern I teach in our free video classes. 1 try, 2 try, and the reason why is because I want those stops, right? I want those stops. Momentum is really bearish here, short term, medium term. I can't pick the bottom, but if I can get some bears trapped in right there, I'd love to squeeze those stops. Now, watch closely here. As we go higher, where does the market want to go? It wants to rotate back and forth inside of that range, right? Okay, now let's add to our winners. And to add to our winners, we always look for one pattern. It's a technical, in this case, a bear trap. Now watch closely on this, so important. It's a shallow pullback. It's a higher high in price. That shallow pullback, remember this guys, separation equals strength. When it separates off that moving average, it tells us we're gonna probably get another leg going higher. I wanna look for that little move right below that low. This is called a failure into trap combination. So 2 ways I want to buy that bear trap. And of course, tomorrow's a Friday, so leave that runner up to the opposite side of that trading range. Now, if we're lucky, we'll get that bear trap off that low. We'll wind up all the way back up to that high. Now, we have to expect there are going to be bears up here. Probably definitely bears waiting to short this thing back down. If we find our way all the way back to that high right now, again, expect bears up here because of all that momentum going low from earlier on this week. An easy way to short this is a technical bull trap. It's very similar to the pattern we saw below there, but now it's going to be a 1 try for the bulls, lower low, 2 try for the bulls, lower low, trap above that high. I want to see a strong red candle below that 21 EMA, bull trap pattern going lower. Remember, where does it want to go? It wants to rotate back down again. As it rolls lower, look for that separation off the moving average. Add to those winners. You want to make more money? Add to your winners with that bull trap right there. These, believe it or not, are the same exact pattern, right? Both bull traps above the high. Now, a heads up on this, right? We're overall bullish on the higher time frame. So these types of trades, I'll take half size position, quarter size position, right? Because they go against the overall directional bias on the 60-minute, right? So bull trap, a lot of examples of those inside the free video course. But I know what you're thinking right now. If we get that bear trap down here, this thing might squeeze and really rip going higher. That would be epic for tomorrow. If we bounce off that low and really rip going higher, could be in the wake of that non-farm payrolls tomorrow. Now look for breakout pullbacks. One of the most consistent things about technical analysis is anytime we see a range that breaks through pendulum swings and keeps on going, we now can use what was resistance as support for a breakout pullback. Now, breakout pullback, whenever I think breakout pullback, I always think about a 2-legged pullback. 1 leg below the moving average, 2 leg going lower. Think about a measured move that goes too far. That will give me the general area. Now, with all of that momentum, breaking through the triangles, breaking through the pendulum swings now, I now want to look for a run back up to retest that high. We now wait for that same failure into trap combination. Once you learn ways to trap, in this case, trap sellers on the wrong side of that 21 EMA, 1, 2, stops are sitting right there. If you are caught short and you get stopped out, what do? You buy your way out. That fuels that move going higher. There's that failure pattern, 2 try failure. And then if you want to make more money, add to your winners. I want that higher high in price. Remember that separation off the moving average. I want this add-on before we go up and retest that high. Again, if this thing blasts and runs higher, squeezes off of that low, now look for that 1, 2, 2-legged pullback, trap the bears in, add more on the runner, targets back up, and of course, leave that runner for Friday afternoon. Now, I have a couple more trades on my radar for tomorrow. Before we talk about those, let's slow down for a second because I know a lot of you guys and gals watching right now, you know these patterns. You're making money with failures, traps. You know what we love range-bound markets so much. But if you're watching for the first time right now, this might be a brand new language for you, a brand new strategy you want to learn. Not to worry, I teach this entire roadmap, the entire strategy. I have hundreds of examples of failures, traps, and a whole lot more. I cover the entire thing in a lot more detail than this in our free video classes. I'll put a link up top there for you. Upper right-hand corner, grab that link that popped up and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each morning. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making more money. Guys, the markets are way too good right now not to be making consistent profits. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free course. Everyone loves the free video classes. Perfect for anyone who's serious about making money in these markets. And also be aware too, I'm gonna put all the important links we talked about tonight, the description of the video. Definitely start first with the free video course, learn the roadmap, start making money on your own. Also, don't forget too, we trade together every morning in our trade room, 8 o'clock Eastern time. I'll put all the trade room membership links down there for you. And if you're on Twitter or X, I post a lot of updates, charts, videos, mindset stuff on Twitter X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn more are linked up in the description of this YouTube video. So we talked about the 4 important clues that are on my radar for tomorrow. Love the idea of some bear traps off that low, that failure into trap combination. I like the idea of the bull trap off the high, but again, right, half size position because we're going right where we're against the overall bullish direction. And if this thing really rips off that news tomorrow, yeah, we know now buying that. What was it again? 2-legged pullback, trap the bears in and squeeze those stops. I'll tell you, I'm getting kind of excited just talking about this stuff right now here on this video. But you know what? I got a couple more I want to share with you guys, specifically some variations of these because those are my favorite trades for tomorrow. But you know, the markets are messy right now. We get the situation happening, Middle East. We may not get those perfect setups for tomorrow. Let's talk some variations on this over on the Nasdaq. Nasdaq's getting a bit lonely over here right now. I mentioned earlier that we're overall bullish into that bear market though. But let's take a pit stop for a second. If you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action takes no time for you, but makes a huge impact on my channel because YouTube rewards me every time you like, share, and subscribe. I know, I get it. We're all busy people, and I appreciate you spending a few minutes with me every evening on these videos. So thank you so much for all the support. Now, let's go talk about some Nasdaq. We're bullish overall, bearish there into that range. Again, a lot of times in these scenarios, we got to go lower before we go higher. Those are 2 really, I think, some really important clues there on the hourly chart. But again, we're not going to trade off the hourly chart tomorrow morning in our trade room. Again, tick charts are where the money is made, at least in my opinion. It's a 4,000 tick chart, upper left-hand corner, and of course that 21 EMA. The Nasdaq is a bit simpler right now. There's that trading range right in the middle. And again, markets like to rotate up, down, back and forth. You notice I've marked up that triangle above and below. I've marked up that, I love that pendulum swing right down bottom. So same basic formula for the Nasdaq. I would love to get a bear trap down there, that failure into trap combination. I'd love to get that bull trap off the high, half size position, or that breakout pullback if this thing really squeezes after that news tomorrow morning. Let's talk about some variations of this, all right? Because again, I'd like to go down lower. I'd like to trap the bears in and squeeze their stops. But you know what? There might be so many buyers with that pendulum swing level down there. We might get down here and this thing may just whoop and run right back up again. these can be frustrating because you don't get a good signal to get in. Watch closely though. These are very tradable. The key is if it V bottoms off that low, it will almost always begin to grind going higher. That grinder is always the giveaway. All you do is mark a trend line off the highs, mark that channel off the low, and don't miss the first pullback off the low of this channel. Now, my favorite trade is I look for one of these prior swing lows, right? Look left, find one of those prior swing lows, like this one right here, that lines up right around the low of that channel. And I want to get that first test off of that low. In my experience, the first test underneath one of these prior swings, hard to lose money on trades like that. It could be a trap pattern. Look, I'm showing you here. Oftentimes, if we don't see a trap pattern, we'll get a failure pattern below that moving average. Failures turn into pullbacks. Again, this might be a brand new language for you right now, but go through the video course I mentioned earlier, and you'll see these will make a lot more sense here. Trap, failure, pullback combo. Remember, tomorrow's a Friday. Leave that runner. You know where the market wants to go. You know the amount we go below the range. We want to run back other side of that range. Remember, you want to make more money. Don't trade more often. Get better at letting your winners run, and ranges are one of the easiest ways to do that because we know how to use pendulum swings and symmetry above and below. That V bottom reversal is one of my favorites. Another favorite of mine is a double bottom reversal. For example, we oftentimes will run lower, we'll get a 2-try failure down here, we'll get that squeeze back up. I always go for a 1-to-1, right? That'll make a lot more sense as you guys go through the video course, right? Go for that 1-to-1, move that stop up to point of entry. But you know what? We're pretty bearish here, the last couple days here. So we may see bears hold the underbelly of that range, and they may try to make another run back down again. Once I retest that low, it's important we think about what's actually going on right now. Anybody who sells short right there, they become buyers at this low because for most of us, we'll take our profit, at least most of our profit, at a retest of the low. Think about this. Sellers up here become buyers down here, okay? That's one thing. Also, is this a good place to sell short? I don't care if you're a bull market or a bear market. At a low like that with a range above us, this is the last place I want to sell short. That means the perfect spot to trap in some rookies, some inexperienced traders who don't watch my videos. They haven't paid their tuition yet to the markets, haven't learned this stuff the hard way like we have. They try once, they try twice. Trap in those rookies. If you're caught short, squeeze those stops. They're buying their way out. And you know this already, right? Because I beat this into our heads every evening on these videos, right? Shallow pullback, separation equals strength, higher high in price, trap below that low. These are very high percentage trades. We get that failure in a trap combination. And I know I sound like a broken record sometimes on these videos, but welcome to trading, folks. Trading is repetition. Once you learn what works, you keep on hitting that button over and over again. Believe me, you'll feel the same way once you learn this stuff and start putting all this stuff together. Those double bottom retests are oftentimes the most lucrative trade because everybody gets trapped and it finally squeezes and runs back up again. All right, now going higher here. I mentioned earlier going higher. We talked about that technical bull trap, right? That technical bull trap. Those buyers trying once, lower low, buyers trying twice. We talked about earlier how these are against the overall bias. So they'll be a half size position, quarter size position. You can do whatever you want, right? But I usually go a little bit smaller size on the ones that go against the overall 60-minute time frame. But you know what? We may not get that. Remember, tomorrow's non-farm Friday. Would anyone be surprised if tomorrow morning the market jumps up and then slams back down again? Of course not, right? That should not surprise anybody. But how do you trade that, right? Because it's almost suicidal to step in front of that freight train, right? Because it's news tomorrow. So if we do run up and then spike back down again, remember these patterns. Remember these patterns, right? As it grinds back down, the grinder is the giveaway. And I know a lot of you guys love these patterns now because I get so many comments here on this YouTube channel. I have some students that only trade the pop and grinds because they're so obvious once you know what to look for. Again, if it grinds up like that, the hard part is don't chase after it. Because if you're anything like me, that voice in your head is going to be screaming at you, going, get in, man. You're missing it. I made that mistake so many times as a new trader. Probably why I'm a good teacher in our trade room. Mark off that low, pin up around that high, and then remember, look left, right? Find some prior swings. I want to find that prior swing high that lines up right on top of that channel and grab that first test off of that low. These are oftentimes a bit easier on the emotions than trying to get that bull trap up there because momentum is so bullish in the bull trap example. In this example, momentum now is turned over and you're kind of riding that momentum now back into that range. This trade makes sense because again, we know that range below us is a magnet and we know that ranges love to rotate. Now remember, once we get back down to that low, do it again, right? There's that same 2 tries, that same V bottom, that same double bottom strategy, the same stuff we talked about earlier. This is where it happens again, right? So we'll keep looking for that rotation back and forth. And one last variation here. I mentioned earlier that if we run up, right? If we run up here, I want to get that 2-legged pullback, right? Two-legged pullback. That's very common. After a trading range, right? There's your range. If we really blast up, right? It's 1 leg, it's 2 leg, right? It's a bit more than a measured move. Okay, that all makes sense, right? Trap the bears in, go back up to retest the high, leave a runner for Friday. So sometimes what happens though is, sometimes when this thing breaks out, it'll break out and begin to grind going higher, especially on a Friday afternoon, right? It grinds going higher there, grinds up. If that happens, you know what to do, right? You know to go out, mark off those highs, mark off those lows, look left, find those prior swings, and don't miss those first tests right off that channel. In these situations, it's really important we look left and try to combine these areas with something. Think about what was resistance becomes support. Whenever we break out of a trading range, it's one of the most consistent things I know about trading. Once you break out, markets, it's not an if, it's a when. So keep your eyes on those prior swing highs, those resistance become support, and look for that first pullback off that low. I wish I had more time in these videos to go more deeper into the entry tactics, but again, grab that free video course I mentioned earlier, and that will give you a much better breakdown there. All right, guys? One last thing here. One last thing. If I'm wrong, right? If I'm wrong on this, and we don't get that bear trap off the low, if this thing tumbles, right? If this thing really tumbles and runs lower, we now use that same technique, right? That range, what was support, becomes resistance. If it really tanks off that low, we then look for that 2-legged pullback, right? Again, a bit more than a measured move, trap those bulls in and back down to retest the low. Now, I like the idea of that double bottom reversal right after that situation, because again, at that point, we're still teetering on the bull side on the hourly time frame. But again, if this thing, if it really rips running lower, blows way through these pendulum swings, you know what I mean? It'll really dump. If it dumps going lower, I want you to remember, don't chase after it. What was support becomes resistance. And it's almost always, whenever we see a range breakout, it's almost always a 2-legged pullback that goes a bit more than a measured move. It may keep on rolling. If it does, we know how to trade the pop and grinds, the V bottoms there. But if we start seeing this thing pull back to that moving average, buyers once, buyers twice, that's that buyer failure, that run back down to retest the low. And again, targets are back at the retest the low. Do we keep going, or do we get that double bottom retest, right? That 1, 2, trap them in, right? And squeeze those stops back up again. There might be an easy 1-2 punch tomorrow. Big breakout for news, right? 2-legged pullback for the breakout pullback, retest the low, and then squeeze back up into that range to finish off the week and finish off the session. All right, guys, that's the game plan for tomorrow. Some variations in case things get a bit weird tomorrow around the non-farm payroll. Now, speaking of tomorrow, don't forget tomorrow morning, every morning, 8 o'clock Eastern time. The best way to start making money in these wild markets is to learn and trade along every morning in our trade room. Once again, I'll put all the important links you need to learn more and earn more in the description of this YouTube video. As always, hope you learned something here tonight. Hope I'll see you sometime soon trading with us. in the morning trade room as well. In the meantime, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.